Hello everyone and welcome to this tutorial brought to you by To The Tick, where today's topic we're going to discuss the bear expanding triangle. Now, expanding triangles are under a bit of controversy between technicians about how often you see them and what type of environment, but I believe you see them as both reversal patterns and as bull or bear trend continuation patterns. Today I'd like to let us focus on recognizing what they look like, being able to identify them and their characteristics. I always like to start with an image that gives us a representative example of what it actually looks like. As a price pattern, what can I use? Well, price patterns are in two parts, and a continuation pattern is all about the pole. That's what gets it started. And in this case, our pole, the base is up here high, and the pole's extension and the tip pointing straight down means that we're in a bearish continuation consideration pattern. Now that means that the pole determines your trend. The triangle or whatever else is attached to that pole, a flag or a rectangle, all of those are really neutral without having that attachment to the pole. So the pole, I cannot stress enough, is the most important factor to the determination of your continuation patterns. It'll also determine a lot about how much more juice is left in your next move, because you're not trading the pole, and you're watching the pole and you're watching, in this case, the expanding triangle. You're looking for that continuation in what comes next. So again, the trend needs to have a pole. Now, as traders in this particular pattern, we might have this great big triangle and we may have a little bitty one, but for me, it always looks like a tomahawk. To me, I'm going to give it a name, and I want to call it a tomahawk. But first, let's go through recognizing it. I wanted you to get that nice, clear visual image and have it in your head, and a lot of times that helps us remember. So let's go on and actually look at the pattern like we would as traders, and we don't get those little images to work with. We need to look at them bar by bar. We establish a reference point, and the bears have been hammering into this line of support that the base that the bulls have got, and can they finally get enough juice? And if they do, we want to see a breakdown. We want to see them break hard and fast through that line, and then we want to see them hold it and run, stomping down that hill. Now, you've watched the formation of the pole, and again, like I said, the pole is most important part to determining about your continuation trend. A nice surge in volume out of the bears, really hard and fast. Then they come into a spot where things either slow down, stop, nail on a dime, but the bottom line is here, this particular pattern has the apex on this side of the price action, and you don't really know here where that low is. This bar comes up and bounces a little bit, gives you a green bar, closes green, and then this one makes another new low. This one bounces and can't get a second low, but it bounces and takes out or equals that high. So you really need to let this pattern, when it's this tight a price range, you need to get at least 2 bars in your activity. Once you get that, then you now have a swing low and you have a swing high. And this is your first spot with the red dot showing you 2 to 2. How big is the range of your red dots is your most important consideration early here, okay? Then we actually get enough with those 2 to 2 to be able to establish an immediate definition of support and resistance. We can bring our image back in here, and there's our nice pretty pole, and we bring our tomahawk back in, and the first thing you're going to say to me, Lav, it looks just like a tomahawk. Next thing you're going to say to me is, this blue image doesn't look like what we've got drawn on here, Lav, between our support and resistance. It's okay. They're not going to be shaped exactly the same. The apex may be tight, it may be wider, but the point is the same. Your prices are squashed in here. They have found a place where they were willing to take profits. It does not mean that the bearish move is over. It means that they've established what I call the muddy trench. The muddy trench in this environment, this is often called an expanding apex pattern, and you can see why. The apex expands from where your prices are settling out. The muddy trench in this pattern gets established early. This is one reason why I really like the pattern. It immediately is showing me opportunities for both early entry short, nice and tight in the price range and still being able to see that there is a pattern. You're being able to see where the pressure is coming in, and if you're watching the volume, you can see both the pressure off the top and the pressure when the bulls support on the bottom. And again, when it fits nice and it makes its own image, that's what finding a price pattern's about. Can I get the pattern to show me an edge? Can the geometry give me some measurements out of that edge? Well, I can measure my pole like we usually do for continuation patterns, take my pole measurement and add it to either the apex here or, very aggressively, add it to the breakdown point. The point is, this is a leg 1 after a new breakdown with a bunch of energy to get that breakdown. This is leg 1. You're looking for a trend continuation pattern out of this pattern, and you think it's got a really good opportunity, and you're going here. Larger charts, confirming numbers, all good ideas, but the pattern itself gives you beautiful targeting here. That apex becomes the muddy trench. You're willing to take a bounce trade on a number 2 long and or that short up there on the top, and if it doesn't make the lines, guess what? In your measurement of the apex, use it to determine if you take your profits. If momentum doesn't keep coming your way, take your profits. Again, once you were taking a short here and you're with that trend trade, do you take some profits when it comes back up to the apex? Okay, let it be your guide for where you move your stop. Again, it's an interim measurement, and it's one of the reasons I like this, because I do get more trades in those 2 and 3 opportunities. I love a third push on a resistance line. For me, I think the markets do a lot of 3s. If you think about our triangles, we like for them to break in a 50 to 75% range during their formation here, which puts it out in here into about a third effort. But again, remember, 2 swings on your chart might be 2 months. Somebody else, it might be 2 minutes. It's not about the size of the bars. We are really looking at the pattern and how the structure repeats itself so that you can make some money by being able to identify it. And again, the muddy trench is where all the activity is going to make or break for whether you're a bull or a bear. Think about it like a football field. And this is the center line. And basically, that's the line of scrimmage. And now, every time we make an additional swing, we get to update our new swing high with our new swing low. And we're still going to take that measurement, like we do typical triangle trades, and we're going to add it to either the apex, take it short, or we're going to add it to wherever our breakdown line is, and we don't know yet exactly where that is, but we're going to use our line in the sand as a target objective. Again, we get to keep watching the pattern and we keep weaving back and forth. Can you take those interim trades? It's all about how much money's in here for you. Okay? If you're trading small trades, there's a bunch of them. You get the contest when you finally break through the line, and you got to think about it all over again. Well, are they going to hold that line? Are they going to hold this line? Are they going to come back to the apex? And again, you get the contest again on this bar. Will they come back inside? Will they come back to the apex? You want the bears to be in total control here. We're getting our 50 to 75% area breakdown. But to retest this line is extremely common. And at least to get an effort to that line, possibly higher. And each one of these bars would be where you'd be looking to move your stop down more aggressively as the pattern continues to break. But realize that this little retrace is quite common. So again, think about that, and it can be an additional new entry if the bears step in and surge with the volume, like what you're looking for, big, strong surge. No problem. Your targets are going to be made, and they'll be made quickly with this pattern. This pattern has the potential to be a very profitable pattern, especially if you get to see some of these early entries. Think about it. You're getting a nice high price for a very low risk entry up here on those third pushes up here. If they coincide with something larger in the other chart and or your breakdown area, larger pictures, it's really a beautiful trade. So again, let's look at a chart right now in a bearish triangle, expanding triangle, and again, the expanding triangle and our tomahawk picture. I've given you the first set of targets. We look for that breakdown of the pole, our apex there in the backside, our resistance, 1, 2, 3, our support, 1, 2, 3s, and when working a smaller pattern, yes, this is a several days worth here, volume across the bottom of my chart, all of that annotated for you, price over on the right. And as we're working the pattern, notice that we already have one target, and that's the repeat, the extension, the leg 2 of our pole. We've already established where it should come from. So very quickly in this pattern, we get to start looking for triangles, rectangles, double bottoms, double tops, reverse patterns in here that might make us some money, because as long as they stay in here and give us this 50-50 sort of volume, they keep dumping, and yet they can't get the price to go any lower. Major messages in here on an intraday basis, okay? And again, these patterns keep repeating themselves. We get that swing high, swing low. We get to make the extensions, and meanwhile we get to use the red dot patterns. Remember the distance, and they're all the same size in my charts. The purple ones are the same size as the purple ones. All the red dot ones are the same size as all the other red dot ones. So matchy that way, okay? Extensions, resistance, and support, I use the same colors. So learn to read my charts, but the bottom line is you're reading this pattern from that squashed apex spreading out. It's a beautiful setup, and as it keeps coming, you use that first swing high, swing low as targets coming from that muddy trench area in here. And notice quite often there's several intermediate activities in here on these patterns, but it's a real nice pattern. And then you get a new swing high, runs its head right into that resistance up there in the background, and yes, it came back on your pole pretty high, but hey, that's a big old spike bar. Right? And then this effort just dies. And look at your volume. Like I said, very close attention to your volume. You'll notice that on both the support side down here, in every scenario, it was a spike bar down and then a bounce really hard. Spike bar bounce. Same thing on the top. Spike bar that they can't get back to. Spike bar that they can't get back to. That's thrust action. Notice what it looks like. They are reaching for the moon to get a certain fill target, and then they're loading and leaving that an island. You think that's a beautiful 3-candle pattern right here? What do you think? 3-candle patterns? So those of you incorporating some of those other techniques and or Elliott wave here, these are waves, aren't they? So again, all of this works together, and when you can see the price pattern and you see that tomahawk with an image, check it out. It's amazing how the market repeats itself. And again, with the new swing high, swing low, we get a new set of targets. Those are the gray ones here. And again, it just keeps coming. Once it fails again, now you have a whole new breakdown, a whole new pole measurement you could do here. And again, this one started with a big old gap. They made up a bunch of ground quickly on you, but look at where it came back to. This bar was on that same apex, so think about it. The most touched number all the way across the chart, and you knew about it from here. Okay? Think about this pattern. It's a very nice pattern. So let's do a conclusion here, and the bear expanding triangle. Understand the pole is the most important thing to be able to identify, because it establishes your trend direction. It also tells you how much interest they've got in that direction, because you want to thrust in volume and in price. Then we have our tomahawk triangle, the lab's name for it. Higher highs and lower lows, and please note it's the same look. That tomahawk looks the same regardless of bullish and bearish. And when you learn that price action, that 1, 2, 3, 1, 2, 3 thrusting, that's what a tomahawk is. Bullish and bearish looks the same. And then we have our muddy trench trades. We can work inside that muddy trench if there's room. But think about it. Keep yourself out of the mud and realize what those pulls are doing, just like that tug of war on the scrimmage line, a football game, or, you know, every line in the sand we have in many of our games, right? Again, we're going to use our measurements to and from the apex, and or we can extend things when we get more aggressive with that breakdown number. Okay, we are looking for new strong pushes in volume and price like what we got out of them in the first place. Show us conviction just like the first pole measurement. Show it to us again. Add that pole measurement. We can work the little triangles. As soon as we start getting swing high, swing low, we just keep updating our lines. And we can also use the bigger measurement, meaning the last swing high, swing low, the highest high and the lowest low in the triangle, and use that as the big boy target. Okay, so thank you very much. This has been To the Tick, and our topic today was that bearish, expanding tomahawk triangle. Thank you, and you'll find the text and some chart examples for you on our website, tothetick.com/edu. Bye for now.